Welcome to this week's episode of Stock Market 101, your go-to podcast for all things related to the U.S. stock market. I'm your host, and today, we'll be diving deep into the events that shaped the markets over the past week and what to keep an eye on as we head into next week. Whether you're a seasoned investor or just getting started, this episode is packed with insights to help you make informed decisions. The week in review: what happened in the markets? Let's start by breaking down the key events from this week. The U.S. stock market saw a mix of volatility and resilience, with the major indices reacting to a combination of economic data, corporate earnings, and geopolitical developments. The Nasdaq had a strong week, boosted by stellar earnings from some of the tech giants. Companies like Microsoft and Alphabet reported better-than-expected results, showcasing the continued demand for cloud computing and artificial intelligence tools. Microsoft's Azure division posted impressive growth, while Alphabet saw a rebound in its advertising revenue. These earnings provided a much-needed lift to the tech sector, which had been under pressure in recent months. The Federal Reserve's meeting earlier this week was a significant market mover. As widely expected, the Fed decided to hold interest rates steady, but the tone of their statement left investors speculating about future hikes. Chair Jerome Powell emphasized that while inflation has moderated, it remains above the Fed's 2% target. This cautious approach kept bond yields elevated and added to market uncertainty. Friday's jobs report showed stronger-than-expected job creation, signaling that the labor market remains robust. While this is good news for the economy, it also raises questions about the Fed's next steps. A hot labor market could compel the Fed to tighten monetary policy further, which might weigh on equities. Crude oil prices surged this week, driven by escalating tensions in the Middle East and OPEC's commitment to production cuts. Higher oil prices have a ripple effect, contributing to inflationary pressures and impacting sectors like transportation and manufacturing. Sector Spotlight: Winners and Losers. Winners: technology. As mentioned earlier, tech stocks had a standout week thanks to strong earnings. Energy: the energy sector benefited from rising oil prices, with companies like ExxonMobil and Chevron posting solid gains. Healthcare: this sector saw modest gains, supported by strong performances from pharmaceutical companies. Losers: consumer discretionary. Retail stocks struggled as weak consumer spending data weighed on the sector. Utilities: rising bond yields made utility stocks less attractive, leading to a decline. What to watch next week? As we look ahead to next week, several factors could influence market movements. 1. CPI data release. On Tuesday, the Consumer Price Index, CPI, for December will be released. This is a critical indicator of inflation, and a higher-than-expected reading could spark concerns about further Fed tightening. Conversely, a cooler print might boost investor confidence. 2. Retail sales report. With the holiday shopping season behind us, next week's retail sales report will provide insights into consumer behavior. Analysts are keen to see if spending trends remain strong despite higher interest rates. 3. Earnings season continues. Next week, we'll hear from major companies in the financial sector, including JP Chase and Bank of America. These earnings reports will shed light on the health of the banking industry and broader economic conditions. 4. Geopolitical risks. Developments in the Middle East and ongoing tensions with China will remain on investors' radar. Any escalation could impact global markets, particularly commodity prices and safe haven assets like gold. Stock picks and strategies. For those looking to position themselves for next week, here are a few ideas. Growth stocks. Tech names like Nvidia and Tesla could continue to see momentum, especially if next week's CPI data points to easing inflation. Value plays. Consider sectors like healthcare and financials, which tend to perform well in uncertain environments. Defensive assets. With geopolitical risks looming, gold and treasury bonds might serve as effective hedges. Final thoughts. The U.S. stock market is a complex ecosystem influenced by a myriad of factors, from economic data to global events. As we wrap up this week, the overarching theme is one of cautious optimism. The markets have shown resilience, but challenges remain, particularly around inflation and monetary policy. Looking ahead, stay focused on the fundamentals and keep an eye on key data points like the CPI and retail sales. Diversification and a long-term perspective are crucial in navigating these uncertain times. Thank you for tuning in to this week's episode of Market Moves. If you found this podcast helpful, make sure to subscribe and share it with others who might benefit. We'll be back next week with more insights and analysis to keep you ahead of the curve. Until then, happy investing.